If you're a trend follower, can the occasional trading pause improve your win rate? Let's take a breakout strategy, add a pause to it, and run our backtest.
Market volatility is often cyclical in nature. The alternating periods of volatility and consolidation are more apparent when long trends are present. For this reason, the next trade after a big win is usually a loss. If you're trading a longer-term trend-following strategy that has just captured a good trend, it seems a good idea to pause trading. This is actually what the Turtles famously did for one of their Donchian breakout strategies. To avoid a series of losing trades in choppy markets, they would skip entries if the last trade was a winner. The strategy would be paper traded until a simulated loss occurred. To test the effectiveness of a pause, I'll use a simple Bollinger Band breakout strategy. For longs, entries are generated when prices close above the upper band, with the lower band serving as an inbuilt trailing stop. Here is its performance on the 1-hour pound-yen over the past 10 years. Let's program a pause now. The strategy will skip entry signals if the previous trade earned more than 75 pips, and fewer than 20 bars have elapsed since the trade was closed. So here's the revised programming logic for longs. The strategy goes long after a Bollinger Band upper penetration, and the previous trade earned 75 pips or less. Or the previous trade earned over 75 pips, and at least 20 bars have elapsed since the trade was closed. If the conditions are met, I'll go long with a market order. Translated into pseudocode, these additional conditions determine whether the pause will be activated. So has our strategy improved? Let's rerun the backtest and compare the results in Quant Analyzer. The trading pause removes 12% of trades, while concurrently increasing the win rate by 2%. This leads to significant improvements in expectancy and profit factor. The flattening of the equity curves over the second half of the backtest is still a concern. Fortunately, since the entry conditions are very basic, there should be room for more entry filters without excessive risk of overfitting. So a pause is a worthy entry filter that could improve your trend strategy's win rate. In general, such pauses work better for short-term strategies that trade frequently. Even with a few skip trades, you can still manage to catch a good number of trends. If you trade occasionally on a higher time frame, a couple of trading pauses could keep you out of the market for most of the year. Pauses can be implemented for a variety of other reasons. Excessive market noise and long losing streaks are two common examples. Sometimes a little patience can help you win the long game. If this video brought value to you, please support the channel by liking and subscribing.